Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Good morning, Ben.
Good morning, Will. How are you?
I'm doing pretty well. We got some change of weather. So what was it? Today's Tuesday. So on Sunday we got quite a few inches of snow. Not too terrible, but it came on pretty quickly. So it's been a
Yeah,
shift.
yeah. It's that time of year where snow is plentiful in some places. So we
Yeah.
didn't get any snow here in Columbia. We were supposed to get a little snow, didn't get any.
Yeah. Well, it's kind of funny. I've noticed that a lot of the time, whatever weather comes through Missouri, it comes to Ohio about a day later. So,
That's
it's
right.
just kind of a fun little pattern there. But looking at forecasting markets, first, what have we seen from the past week?
Yeah, sure. Old crop corn for March down 4 cents to 6.66. New crop corn down 8 cents to 5.86. Old crop soybeans down 27 cents to 14.90. New crop soybeans for November down 44 cents to 13.39. Soybean oil was down a little over a penny to trade just above 62 cents per pound. Soybean meal was down $9.20 per short ton to $461.90. Old crop wheat for March was down 13 cents to 7.20. New crop July wheat down 12 cents to 7.30. And then that West Texas intermediate crude oil price for the month up almost $1 per barrel to trade just over $81 per barrel.
So a lot of losses on the commodity side, minus maybe crude oil there at the end, but a little kind of interesting tidbit on the March corn
If you're a
contract.
grain farmer, this was a pretty bad week.
Yeah, yeah. Well,
Output
especially with
prices
that
down,
corn
input
contract.
prices up.
Well, especially with that corn contract sitting at $6.66. If you're superstitious, watch out for that. No,
Well, the other thing, yeah, so the other thing here, Will, is March soybeans. Those old crop soybeans continue to trade briefly above 15 bucks, but they just don't like the air above $15. So
well,
back below 15 again.
well, it's a pretty remarkable territory to be in, though. If you're
Mhm.
consistently above $15, it just kind of gives you a little bit of insight where the market's been for the last several months. I mean, kind of finding a hard limit there right around that $15 mark, but still, I mean, 14.90, it's still pretty elevated. So,
Absolutely.
yeah, so it all comes down to perspective there, I guess. But looking at the factors that we've seen this past week, what's really been leading to those kind of soft losses that we've seen over the week?
Yeah, really soft demand across the board. Stuff we've been talking about, but I'll just run through a couple of them. So we got the December National Oilseed Processors Crush report last week. It came in at 177.5 million bushels. That was below the trade average estimate, but probably also noteworthy was soybean oil stocks were above all trade estimates. So two bearish factors there for the soybean complex and soybean oil. Crude oil and gasoline stocks increased while ethanol and distillate stocks decreased. Gasoline demand was up with ethanol production coming up as well, but not enough to keep stocks from increasing, or ethanol stocks from increasing. It was a strong week of export sales. Finally, I think we'd had some really lackluster sales for a while, and it was nice to see some stronger ones on the grain complex. Corn sales were their third highest of the marketing year. We saw some grain sorghum sales finally. Soybean sales saw a counter seasonal bump and reached a 5-week high. Open interest positions increased across the board. We also saw managed money positions increase across the board. Friday's cattle on feed report showed that cattle on feed was down 3% from last December. And then agriculture export inspections were relatively strong compared to the last few weeks. Everything was within pre-report expectations. Grain, sorghum, and wheat were both up week over week, whereas corn and soybeans were slightly down. You're on mute, Will.
I'm sorry. It feels like a Monday this morning, but no, I want to start the conversation where you kind of teased there a little bit ago on the exports. Finally, some positives coming into the commodity market from U.S. exports. It's been sluggish the last several weeks coming into last week. So, is this a potential building block that we can see trade continue to really go through as we look to close out January?
Well, it's if you're a grain farmer or if you're selling grain products, grain and oil seeds, this was a positive week on the export front. But it's not enough, and nor do I think these are going to continue. I think that's probably my message for shippers, if you will. On the corn side, I'll just start with the corn side for just a second. We did see strong corn sales, but they basically brought us back up to average. We have not started chipping away, even with a stronger week. We have not started chipping away at that deficit we built. And so while sales are improved, they largely match export volumes of previous years. But due to the sluggish sales earlier in the year, we remain about 37% below normal for this time of year. So corn export sales struggling. The soybean complex saw a counter seasonal move. What do we mean by that? Well, normally this time of year, our sales are tapering off because South American production is coming online. I think some of the drought concerns that we've been seeing in South America, specifically Argentina, provided maybe the opportunity for some international buyers to put some sales on the books, and we saw a decent week of soybean export sales.
Well, it's kind of interesting to looking at a more macro scale, the trends in trade, especially exports. Our largest export in China, over the last 5, 6, 7 years, because it's really gone from, in 2016, 19 $19 billion worth of exports, and then really into 2021 it shot way up to more than 33 billion. But now we're seeing maybe some of that try and taper off as China's motivated to really limit that, because obviously that costs them quite a bit of money, trying to look at developing other markets such as Africa or domestic production as well. So longer term, what kind of factors, what kind of expectations do you have with China specifically?
Well, so you were talking about corn there, and we'll just start there. I'm not trying to continue this conversation on corn all through this program, but I think corn's an interesting one, especially as it relates to China, because for the past 2 decades, China has really focused on all their production advances and all their technology, or especially ag technology, in the corn market. They've largely allowed the soybean market to be import dependent. That gap between what they consume and what they produce continues to grow on the soybean side, and they fill it with imports, specifically from the United States and Brazil. But on the corn side, they've largely been able to keep pace. Up until probably the last 5 years, their production has largely matched what they consume of that corn market. We saw some bad years of production within China, some typhoons, some other flooding that really limited their production, and that really kicked them to the international market. As you mentioned, in 2021, they came into the United States. They bought a lot of corn. We saw a lot of flash sales. A lot of people were crediting that to the phase 1 trade deal. I truly believe it was because they needed corn. As we turn the calendar here, I don't see them needing as many feed grain products, at least not in the next couple of years. And if they do, I fear that Brazil is going to become a major competitor to us in corn exports. They continue to increase the size of their soybean acreage. Of course, increased soybean acres increases that second crop corn production as well. So, I see, our ability to grow that market in China to be positive. I think we can continue to grow it here in the United States, but certainly not like what we saw in 2021.
And so really going off of that, moving forward, what new markets, what smaller markets is the U.S. really positioned to try and develop to really get more market share and get more exports on the books?
Yeah, that's a great question. We've seen some momentum within Egypt for things like soybeans. We've seen other markets like India, Korea. Korea has always been, or has been, a large corn market for us for a while, but we continue to see strength in those markets as well. And Colombia is buying more U.S. ag products, corn and ethanol, to kind of help meet some of their clean air initiatives as well. So, I think those are all potential partnerships. Of course, trade agreements and free trade agreements tend to help that picture a little bit, because it makes the trade environment move a little bit quicker. And we just haven't had a lot of those over the last 6, 7 years that have really spurred some growth, international growth. But commodity organizations and trade organizations across the board continue to build these markets. So maybe some smaller markets to help fill in pieces. But certainly, at least on corn, it's going to continue to be Japan, China, Korea. On soybeans, it's going to continue to be China, and Egypt, other places that have bought substantial soybeans over the past couple of years. There's just
Yeah, well,
nothing to replace those really in terms of growth areas.
Well, just talking about the tone of trade that we've seen over the last 6, 7 years that you mentioned, not a lot of free trade agreements coming out of the Trump administration. Honestly, really, when you look at it, the Biden administration has really kept a lot of those kind of same trade, ideas, that same policy in place of kind of the no nonsense negotiation style. So, do you see, that's causing any issues, or maybe leading to some positive outcomes here in the shorter term as we look forward at continuing negotiations with countries like Mexico when they look at the GMO conversation as well?
Sure. So that's kind of been the big question here lately, and certainly, what do we do if Mexico, our largest buyer of corn, all of a sudden doesn't want our corn, or at least the largest portion of our corn? Where do we go to pick up some additional buyers? The administration has been working with the Mexican government. They were down there just this last week, trying to smooth out some of this tension here. And of course, we've seen a little bit of delay in that rollout, trying to build up the transition phase, if you will. The U.S. government has repeatedly said they're willing to go to formal dispute channels through the U.S. Canada Mexico trade agreement that was signed 5 years ago, maybe now. So there's opportunities, I think, for this to get resolved, but certainly the two sides seem to be pretty far apart at the moment.
So, looking forward to the rest of the week, it finally feels like we're getting back into a regular schedule when it comes to just the market being open after New Year's and Christmas, and then Martin Luther King Day. So, really coming into this week, what reports should farmers and ranchers really be paying attention to that could move some markets?
Yeah, so Wednesday of this week, we get the ethanol report in the morning. Thursday, ag sales in the morning for those export sales again. Friday, commitment of traders. And then next Monday, I'm throwing in a new one kind of here. Not only do we have export inspections next Monday, but we also get state stories reports. These are important this time of year because this is where we find out about that condition of the winter wheat crop. I like to remind folks that wheat is one of those crops that, winter conditions don't really mean a lot. We have to wait to see what that crop looks like after it comes out of dormancy, but certainly an update on winter wheat conditions in Kansas, Oklahoma, and Colorado.
I feel like I cheated you a little bit. We didn't really get to dive into wheat too much. So, do you have any pre-report expectations on that state stories report?
No, not really. I mean, the winter wheat conditions were the poorest on record at the end of the last reporting season. I intend that they'll continue in that same pattern as we look ahead. There just hasn't been a lot of moisture. They did get some snowfall this week that will protect that wheat as bitter coldness comes, but certainly the wheat conditions don't look good, and there's not a lot of progress, at least on those at the moment. So.
All right, Ben, it's always a pleasure having you on with me this morning, every morning. Listeners, viewers, if you'd like to learn more about what we do, you can do so at brownfieldagnews.com. You can also check out our sister program, the weekly livestock market update with Brownfield's Megan Grebner and Mizzou's Scott Brown at brownfieldagnews.com. I'm Will Robinson on Brownfield.